I think the share price reaction that you see with Kering today is just a reflect of what the company has said yesterday evening at a call, saying, first of all, that current trading was not great and that April is actually below the performance of Q1, which implies that there should not be massive improvement in Q2, which we were all more or less expecting a little bit. And the second thing is, of course, as you mentioned, the fact that the indication that they have given for H1 and H2 profits are leading to massive downwards revision from the consensus we have estimated probably around 15%. So this is true that Kering is currently trying to turn around the Gucci brand at a time when the Chinese market, or the Chinese customer cohort, is pretty lackluster. So this is why it's probably going to take more time than originally anticipating.
Yeah, how do you define, Aurelie, how do you define the part of the China market that is coming under this pressure, that is causing these headaches for Gucci? I was reading in our story earlier on one analyst saying, suggesting really that it's too expensive for some consumers and it's too cheap for some consumers, believe it or not. So where does that leave a brand such as Gucci?
This is true that most of the luxury houses have passed on massive price increases during the 2019 and 2023 period by roughly 50%. So that is true. That was one of the reasons why the aspirational consumers was actually flying off the market. So now we tend to see that the richest part of the consumer is still there, but it's probably not enough to drive the volumes for all the brands in the industry.
Aurelie, we should mention that I believe you have a €400 price target on the stock at the moment. When we're talking about visibility into the recovery story for Kering, what do you need to see?
Well, we need to see one thing, which is sales picking up. And considering the comparison base that becomes much easier in H2, we hope that can happen. Actually, probably, maybe not in Q3, but at least in Q4.
And when we're bringing it back to kind of the China consumer story, Anna already touched on this, but where does the U.S. consumer fall in here? Can the U.S. consumer make up the gap?
Unfortunately, no, because, the Chinese consumer remains the number one consumer. And that is true that the U.S. has entered a path of more normalized growth, even if in some cases it was actually negative in 2023. So there should be a recovery, but not enough to compensate for the weakness in the Chinese consumer. At HSBC, we expect 7% growth for the luxury market in 2024, and we expect 7% for the US and 4% for mainland China.